What's up, everybody? Michael Silva here. How much more juice do we got in this rally? That's what we're talking on today's Stock Market Brief show. If you're new here, welcome to the channel. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Hit that thumbs up. Subscribe to the channel if you like this type of stuff. We're going into Apple. We're going into Tesla today. We're going into the Qs, the SPY, and some bookmap levels as well. We're going to get right into it today. So this is what I'm looking at. We're in an overall downtrend in the market. Nothing new, okay? 2022 has been a poo kind of year if you've just been a passive investor. Now we have this chop box, we'll call it, right here, and we broke down from that. And very likely what it's typically you see is backtest of that area. So if we were to come backtest it, that would bring us to right around that upper weekly expected move, right at about 39.50. That is what I see so far here as far as the daily time frame goes. Now, if we zoom in onto the book map, I found this interesting that we do have some high levels of liquidity up here at, what do you know, ding, 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 39.50 to around 39.60 on ES. What do I mean by orders areas of high liquidity? Well, this is a heat map that's showing you level 2s. It paints it on the screen. This is an incredibly useful tool if you are trading, right? If you are just looking at a candlestick chart, as I typically say, you can't see what orders are hiding behind the screen. So if you take your blindfold off, you then get to see what's actually trading. So this is something that I use on the daily. And the couple of levels that I also want to point out here, both from the upside and the downside on ES, is this area right over here. You can see this spike, that's 39.30. And then we have 39.20, which was an area of contention today where price kind of came up into it. And you can see the seller's wall kind of held in, came back, back tested the VWAP, boom, tried to come back for it, got pushed down, came back again for another time, but sellers held, pushed it right back down there too as well. So 39.20, slightly above that. You know, if we can get above that, maybe back or come and test that 39.30, absorb that liquidity, and if buyers stay and hold this area then as a new area of a potential support, we could very well make it to go fill the orders up there. Now, there's some levels on the downside too that have been growing, 38.80 and 38.50. So those are going to be levels if we get below that daily VWAP. What let's go more into depth on like the 15-minute time frame. So what I'm looking at here is price got back above that 5-day moving average, and that 5-day moving average, it's still declining, okay? So still we are in a overall bearish trend, but we do have some bullish things developing. We had this falling wedge pattern, which we discussed on the prior episode, right? Expansion, boom, leads to contraction, boom, we blew to the upside. Now, you know, I took a long position here because I thought, hey, there's a positive divergence building. It made sense to do so, okay? But if you didn't, don't worry about it. That's totally fine. I can understand why nobody would want to, you know, or have fear coming into, you know, bottom feeding here. A lot of people like to wait for it to be in actually a bullish trend, you know, something like that, boom, and then play it to the upside when the 5-day moving average starts turning back up. So these are, you know, higher risk, but as far as like percentage of wins, but it still has, you know, as long as you're managing your risk on the trade, you can be comfortable knowing that, hey, you know, it makes sense from a risk reward standpoint. So when this played out, boom, boom, and I'm rattling here, look at the reward versus the risk right down here. So it's already a pretty good trade. I've already updated my stop losses because we are still in a bearish trend. However, as you can see, we started moving up. It was a nice big gap up to start the day. And now we're just consolidating here. And the consolidation I like to see, right? So seeing this consolidation, working off this negative divergence that appeared on the 15-minute time frame earlier in today's trading was something that I was paying attention to, and I was looking for price to just still hold up. So as long as price holds up, maybe we get a little bit of a snapback. Maybe we retest the 5-day moving average and it starts doing something like that, come back, and then boom, maybe it's something like that. Or maybe we just start ripping, right? There's a couple more days left in the week. If we do come up to that 392 range, we're coming right back into that overhead supply, which could be an area of potential resistance. Now, I also want to zoom in here and show the anchored VWAP. This is the same chart, 15-minute time frame, different look. Okay, this anchored VWAP right here is the month-to-date anchored VWAP. Okay, and we're clearly below that. So the average buyer in December is underwater based off of volume, right? And you can see here the blue line. The blue line is the week-to-date anchored VWAP. So we got below it. We finally got above it. No, we just kind of chopped around. And then we kind of closed right on it. And you can see how price action started coiling up here and getting tighter. And then Today, we blew to the upside and then we consolidated by this anchored VWAP. This anchored VWAP is just the anchored VWAP from the Fed Powell meeting, right? So a lot of volume is traded when Jerome Powell talks or a Fed member talks or even a macro data report drops. So it's always like important to just anchor a VWAP and potentially watch how price trades around there. You can see area contention, we broke down beneath it, and now we're finally testing it. And what I like so much about how it's set up here is price is actually not selling off. It's holding up as it stands right now near that VWAP. So if we start breaking out, that opens the door to potentially head to this volume shelf profile or come into the upper weekly expected move. And as you can see, if this is a bull flag, a full measured move would take us, bam, right to that upper weekly expected move. Now, if we go up to the upper weekly expected move, you must understand, which is right, okay, right here, boom, boom, it is still right? Boom. Below the month-to-date anchored VWAP, and we're coming into a prior area of support, and same with this volume shelf profile over here, boom, it can potentially act as a level of resistance. So the thing is, there's probably, if we do get up here, there's going to be other people that are like, oh, the market's ripping up, you know, everything good, perfect, Santa Claus is here. Okay, and they might be right. We might get further upside, but a lot of people might enter in, and then we get this all of a sudden a pullback or something like that. And you just got to be prepared for those type of things. Now, we're also looking at the BP chart coming into that overextended to the downside territory, right? 25.87 on the RSI. So that allows for the possibility for this to rotate out of overextended to come back up, which could mean that the market could push higher. So that, you know, more of a bullish bias as it stands right now. Bullish bias in a bearish trend with somewhat of a bullish trade setting up. So it's a very complicated, you know, area to be in, okay? So I hope you understand that. I get comments all the time. Oh, so it could go up or down. Yes, it can go up and it can go down. But there's a reason why I talked about this here, right? As saying, you know, just have a tight risk. And if it snaps you out, okay, big deal. Because the upside potential was worth it. And if you get out of the trade now, if you entered right here and got out right here, that is still I would say a 3-to-1 risk to reward ratio. So that right there was a good trade if you were able to take it. Now, a couple of videos ago, I talked about Apple. Apple has a huge correlation to the overall market. Some might say Apple is basically the market just because of how big of a market cap it actually has. And it has been getting hit hard. Now, I drew this demand zone out, and the reason that I'm looking at this current demand zone where it currently is because there's areas of support here, and then I drew it down to 130. Mike, why is it 130? Well, I look at bookmap levels, and as you can see here, 130 had a huge, massive amount of orders sitting there. So I knew that, hey, if 130 can hold, this could potentially still be an area of demand, right? So it's just an auction. You know, you have buyers and sellers. And there's a lot of buyers down in this area. And these levels can potentially act like magnets and eventually get filled. So this is a level that you want to still pay attention to because we could come back down and even break 130. And if we break 130, that is not going to be good for SPY. It's not going to be good for Qs. But as it stands right now, we're holding above it. Above us, though, take a look here at 137 and 136.50. 136.50 came in. These orders came in at around 8:30 today. You can see it started right about here, and they held throughout the entire day. And we're not talking a little bit of orders. We're talking just as much as we see down there at 130. So what am I looking at? Well, I would like to get above 136.50 and have the buyers still remain. So absorb this liquidity. Boom, 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 boom. If it can absorb that, get above the high of today's trading day, that might open the door to come fill that 140 area. Because that has been sitting there for a while too, and these can potentially act like magnets. So those are the levels that you want to pay attention to on Apple, and that obviously would be very good for the Qs. It'd be good for SPY and this continuation of this bounce. Now here's Tesla. This is something I posted on the Discord a while ago. It was just an area where we saw support, then turned into an area of resistance, and then we're coming back up into that resistance. If I pull it up now, more clear image, you can see resistance held, and it's been a straight shot down. So, you know, a great short opportunity. It's hard to say, you know, hey, did you hold it all the way down to here? I didn't personally, but we had this flagging pattern, right? Flagging pattern, boom, broke down, almost a full measured move. I mean, we're talking a huge, huge decline from around 200 down to 140. And here's the thing, you typically get some sort of snapback at some point. Now, Tesla is also a large market cap, so if Tesla starts getting some sort of face-ripping rally at some point, well, guess what? That's going to probably help the S&P 500 and the tech sector, or Qs or something like that, okay? Now, how far can it go? Well, there's an area where it broke down. That was prior area of support. Support has not gotten retested, but that can potentially act as an area of resistance. So if price came all the way back to 170, should you be shocked and awed that, oh my God, it went from 140 to 170? I wouldn't be, but I would also understand that, hey, we're still in a bearish trend. So if we were to come snap back in the face up here, you know, it could potentially act as a level of, once again, resistance like we've seen in the past. So that's what I'm paying attention to Tesla. I personally, if you're short, be careful, right? Like, congratulations, it was a great move to the short side. But now we're obviously, RSI is getting pretty burnt to a crisp. This is moving down. I know in January, I think it's 20th, Bot Gamma was pointing out that there are $8 billion worth of puts expiring, which could potentially fuel a face-ripping type of rally. So, and we've seen that kind of stuff happen in Tesla. So be careful from the short perspective on Tesla. It is bearish context, so you'd want to, if you were shorting it, it'd be nice to see it bounce up, obviously. And that 170 level would be some area that I'm kind of paying attention to. Now, if we take a look at the Qs, Qs is right there. You can see right on the 5-day moving average. It is trading above it. 5-day moving average is still declining. This was a little pivot area that I was watching intraday. It broke out through that really early, right? And now we're just flagging sideways. So we broke out of the wedge. Boom, congratulations. Almost tagged the lower weekly expected move, didn't quite get there, and now price is just consolidating. We had a negative divergence form, and price is still managing to hold up. So this negative divergence, right, as long as this, you know, resolve itself through consolidation, that's actually, to me, more bullish, right? And that could set the door up for a potential rally. The Qs aren't getting nearly as much as movement to the upside as SPY, you know, mainly led because of that energy move today in the SPY. But as you can see, we're really unchanged on the week. We're right there. So this is upper weekly expected move, lower expected move, and we're right there, basically just unchanged on the week. So a lot of movement, but we haven't gone anywhere. BPNDX chart is moving in that overextended territory at 29.6 there too as well. So I'm not really looking to short it, right? I like to short when we get way up here or let my foot off the gas a little bit on long positions. And then I like to look at individual setups for potential short spots. And if you take a look at IWM, we have a broadening wedge pattern here. It broke through this pivot, broke through the rising wedge. Look how perfect that structure was right there. Bam, to the upside. Huge, huge move. And we're not all too far off of the upper weekly expected move. And just pay attention. We have trapped, you know, overhead supply. So if price were to, you know, doodle around, you know, whatever, bam, watch for something like that to potentially happen. And just make sure that you're aware that, hey, you know, you coming into a higher traded area of volume and prior price action could act as resistance if we were to come up here. So that's all I really got on today's episode, everybody. I want you just to recap, understand that this, I'm looking at it more from a bullish perspective, given the seasonality, given the current price action, but things can change and things can change quick. So what do you do in those situations? Well, you make sure you manage risk. So we played it from the outside. Now you can have a stop loss under this 5-day moving average. You can have a stop loss here. You can have a stop loss here. You can have a 50% stop loss here, a 50% stop loss here. And if you get stopped out of one of them, maybe it rips back up like that, or maybe it rips you both out, but you still manage to have a break-even trade. So it's all about just fixating on your risk. Focus on that. Don't focus on outsized gains right now, right? It's a very volatile market. If you keep continually focusing on risk, right, and how much you could potentially lose versus how much you can always make, right, you're going to be in the right direction. That's how this game is played. It's about preserving capital and growing it over the course of time, not YOLOing and getting all nuts out there. That's all I got for you on today's episode, everybody. See you later.